Okay, we are going to do the topic other payable, other receivable for the MCQ. First question, a business provide the following information. Electricity, insurance. We look into the last sentence. Which amount will be charged to the income statement for the year ended 31st December 2019? So this one for the syllabus 2027 onward, this one we call profit or loss. Okay. Now, we want to find the amount. Open a simple T account. Electricity. Accrued is a liability because both are the expenses. So, balance BD in the credit side. Amount paid, credit bank, debit electricity. End of the year, accrued. Accrued is the liability for the year end. Balance CD in the debit side. 320. Okay, you take the total debit minus the credit, then you will get the income statement amount, which is 1620. So this is the answer. Okay. Now come to the insurance. Insurance also expenses. Open the simple T account. Prepaid is an asset. Balance BD in the debit side. Amount paid in the debit side. This is for the insurance. Prepaid end of the year, balance CD in the credit side. So the differences, same thing. Take the total debit minus the credit, then you will get the 1160. So this is the amount. So the answer is C. Question 2. Arjun rent part of the premise to AJ. So this is the owner. This is the tenant. Okay, to Arjun, this is the income. This to the tenant is expenses. For 6,100 per annum. Per annum means that the whole year. So the amount will be for the income statement or the profit or loss. At the beginning of the year, Ajay has paid 2 months rent in advance. So you have to take the 6120 divided by 12. See how much the opening balance. So 6120 divide 12. Okay. So times 2. This is the opening balance, which is 1020. Okay. Now, next is that at the end of the year, pay 3 months rent in advance. This 3 months rent in advance, also the amount that we have to adjust it. So we take 6120 divided by 12 and 3. So we get 1530. So now the question is, are they talking about Arjun or AJ? So we look at the last sentence. How much rent was received from AJ? I mean, rent received is an income account, which is distinct from owner point of view. Income account, if pay in advance, is a liability. So 1020, this is a liability, current liability. And then the whole year, this is the whole year, which is the income statement amount, 6120. And the end of the year, this is in advance. The income received in advance is a liability, 1530. Same thing, they want to how much received. They mean find the bank amount. So take the total debit minus the credit. So we get 6630. So the answer is C. Question number 3. A company financial year end on 31st December 2019. On 1st December 2019 is pay rent 8,000 for the 4 months ended. So financial year end is this one. So means that we need to calculate the 8,000 4 months. 3 months is a prepaid amount. So we times 3, so we get 6060. Okay. So 6,000, sorry. Now next, what was the opening balance? So now we take the simple P&L, T account, rent account. So here, amount received paid bank, which is 8,000. Beginning of the year, Here, beginning of the year for the December, this one. So because this one is a prepaid end of the year, prepaid amount. So balance CD, 6,000. So the income statement will be 2,000. So this amount, the question is asking opening balance on the first. They are asking the balance BD on the 1st Jan, which is this 6,000 that we calculated. And because this date is sitting in the debit side, so it's in the debit. Okay, so the answer should be D. So be careful the date they are mentioned. Question number 4. The balance of a book on first, this is beginning. What do this balance represent? Debit is a current asset. Credit is a current liability. This both also income account. Income owing, this is owing, then is an asset. Income owing is asset. Income prepaid is a liability. So commission received, income outstanding, income outstanding. Whereas rent receivable, which is a prepaid, so income prepaid. So the answer is B. Question number 5. At the end of his financial year, Raminder made an adjustment for the rent owed by a tenant. How did this affect Raminder's financial statement? So adjustment owed by a tenant, that means this is an income accrued or income owing. Okay, the double entry will be debit, other receivable, credit, rent received account. Okay, how did this appear? Financial statement, they talk about the income statement and also the SOFP. This one is a profit or loss. So when we adjust, because income, when we credit, that means this income credit, profit will increase because income increase. So increase. This one is a current asset. Debit, current asset, debit is an increase. So the answer should be D. Okay, question 6. Annual rent income due from Kumar, a tenant, is 3,600. At the start of the Kumar has prepaid rent of 900. So this one is an income account. When you have prepaid beginning of the year, is a liability. So your balance BD in the credit side. At the end of the year, he owes 2 months rent. So this one owed is an asset. 1 year, 3,600. Okay, divided by 12 times 2. So 600. Okay. Here is a owing. This one is due from Kumar. Rent was received from Kumar. They're asking about the bank amount. Okay, which is this is an income account. Bank amount sitting here. So this one, at the end, we owe 2 months. That means this one is a balance CD, 600 sitting in the credit side. This is the profit or loss amount or income statement amount, which is the 3,600. So the differences take the debit minus the credit. So you will get the answer 2100. Okay. For the question 7, at the end of his financial year, a trader had a prepaid insurance. This is the end of the year. Prepaid insurance. Prepaid insurance, this one is a other receivable. How will this appear in the insurance account and the statement of financial position? So your this adjustment, when you have prepaid, you have to debit other receivable, credit, insurance. Insurance is expenses. Okay. So insurance account. So what we're going to do, we have to credit insurance. Okay. this account under insurance, okay, bank sitting here. When you have this prepaid balance CD, put into here, this amount, the prepaid amount, and then balance BD will be in the debit side. So here they say carry down, that means CD. All they want is a CD. That means in the credit side, which is this one they are talking about. So the double entry is debit, other receivable. That means this is an asset. So my answer is A. Okay, question A. Which journal entry made for the, okay, we open the T account. I will prefer use the T account. So this one is a rent receivable. This is an income account. Income accrued is an asset. So 480 in the debit side. During the year, this is the amount received, which is the bank. So bank in the credit side. End of the year, rent received in advance. Received in advance, this is a liability. Liabilities balance CD in the debit side. So the differences they want to find is a profit or loss or income statement amount. So the double entry will be debit rent received. Okay. Debit rent receivable. So this one is debit rent receivable also. So either C or D. And the amount transferred to the income statement in the credit side. So take the total credit minus the total debit. So we get 5600. So the amount should be C. Question 9. The financial year of Peter and on 30th September. On 1st August 2020, Peter received rent. That means this is an income. This covers the period from the 1st July. Means you have 1st July financial year end. And then this one pay up to the 30th November 20. Okay. So from here to here, this is a 3 months. This one means that this 5 months. Okay. So that means 2 months here. Okay. This is a prepaid. Okay. So prepaid income is a liability. Okay. So you will have rent receivable. This one liability, balance CD sitting here. Okay. So here is 5 months. That means 1 month is 200. So this 2 months will be 400. So this 400 is a liability. It will be sitting debit here, balance CD, balance BD in the credit side. This is our current liability. So they say that on 30th September, is referred to this one. Okay, this is our current liability, and the current liability 400. Question 10. Which statement is correct? This is the expenses account. Expenses account, bank in the debit side, income statement of profit or loss in the credit side. So what's the statement? Which statement is correct? So balance BD in the debit means this is a prepaid expenses. Balance CD means this is the accrued. So rate are accrued at both. This is wrong because one prepaid, one accrued. Rate are accrued at the start. No, this at the start is a prepaid, so this is also wrong. Rate are prepaid at both, so also wrong because one prepaid, one accrued. Rate are prepaid at the start of the year and accrued at the end of the year. So the answer should be D. Which entry was made in the income statement for the year ended 31st December for the rent receivable? Rent receivable is an income account. Okay, you want to find what is the income statement amount. Income statement for rent receivable is in the debit side, or the profit or loss in the debit side. So take the total debit minus the credit. So the differences is 3400. This is the income statement or profit and loss account. So come to the income statement because they say that which entry was made in the income statement. So this side is debit, come to here will be credit. Income is in the credit side. So in the credit side. So the amount should be 3,004 in the credit side. Take the total credit minus the debit. Question 12. During her first financial year, a trader paid 1,008 for insurance and 3,200 for the rent. Both also expenses. At the end of the year, she transferred insurance 1,005 and the rent to the income statement. What does the balance remain on the account at the end? So here, you open the insurance account. So insurance account, you pay 1,008. They say they transfer 1,005 to the income statement or the profit or loss. The difference 300. This is a balance CD. Balance CD transfer to here become balance BD. That means this is a asset, current asset. So this one is a prepaid expenses. Insurance is a prepaid expenses. Come to the rent. Rent is also expenses. And beginning, they pay for 3,002 and they transfer 3,006. That means in the debit side, we have one amount, balance CD. This balance CD transfer to here become balance BD, 400. This balance BD or balance CD here is referred to the liability. So liability is accrued expenses. Question 13. At the end of financial year, Mui has prepaid rent. This is end year prepaid rent. Prepaid rent means that the balance BD in here. Okay. How should she record this? So credit 1,005 in the account and carry down as a credit balance. So this is wrong. This one should be in the debit balance. Okay. Credit 1,005 in the rent account and carry down as a debit balance. So this one as a debit balance, carry down to the next year. So you credit here, balance CD, 1,005. And then you put here, 1,005. So this amount should be in here. Okay. On 1st April 2021, commission receivable, this is an income account, was outstanding. That means this is a current asset. Okay. Commission receivable during the year end amount. That means this is a income statement. Okay. They say commission received, sorry, this is not income statement. This one amounted to, that means this is a bank amount. Okay. Which journal entry should be made at the end on the, so you need to find the income statement or profit or loss. So asset, debit side, bank, 4,850, this is a bank amount. The differences transfer to the income statement or the profit or loss amount. Take credit minus the debit, so 4,640. So this is a commission receivable account. So you have to debit commission receivable account and credit income statement. So the answer is B. Question 15. Mariam owned a business providing accounting service. She provided the following information. Fee owed by the client. Fee owed by the client is asset. This one, beginning asset 4,500. This is an income account fee. Okay. And then fee received from the client. This one is the amount of the income bank amount. Okay, bank in the credit side. And then fee owed by, this is end of the year, owed by the client. That means it's an asset. So balance CD in the credit side. So the question that how much charged into the income statement or the profit or loss. So take the total credit minus the debit. So this is the P&L amount or the profit or loss amount, which is 19,500. So the answer is A. Question 16. Martha rent out part of, that means this is the income. On 1st September, she owed rent of 1,500. So this is the beginning of the year. Owed means income owing is asset. So in the debit side, balance BD. And end of the year, she was owed 1,008. This is balance CD, 1,008. This is balance BD, opening balance. During the year ended, received, that means this is a bank amount, bank in the credit side. So how much transfer to the income statement of profit or loss? So you take the total credit minus the debit, which is 6,300. Okay, question 17. During the year, pay advertisement expenses, some related to the following year. That means this one is a current asset. So your double entry is debit, other receivable, credit, expenses. So when you credit expenses will reduce, then profit will increase. Okay, this one is a current asset. So current asset will increase. So now increase and then increase. So the answer should be B. Okay, question 18. Annual rent income due from Kumar, a tenant, 3,006. At the start, okay, Kumar has prepaid rent 900. So this one was received from Kumar. I mean, this is a rent income account. Okay. This one, annual, means profit or loss. This is a profit or loss amount. At start, Kumar had prepaid. Prepaid rent is a liability. So 900 sitting in here. And end of the year, there is a 2-month rent owing. So this 2 months, you take 3,006 divided by 12 times 2, which is 600. So this is a 2 months owing, is a current asset. So the differences is the amount that we receive for the bank, which is take the total debit minus the credit. The answer is 2001. Question 19. A trader pay her insurance premium on 1st Jan for each of the following 12 months. So this is a payment date. How much did the trader include for the insurance in her income statement for the 31st March 2022? I mean, your financial year is April 2022 to 31st March 2023. Okay, this is the amount. So the financial year end, this is a pay amount, payment. So your financial year is the 1st February 2022. After that, this one for end of the year, 31st 12 2022. Then after that, continue 31st 3rd 23. So in here, this one is a 9 month. This is a 3 month. So in this 9 month, how much we should recognize as an income statement? We divide by 12 times 9. Whereas this one is a 1920 divided by 12 times 3. So this amount, we get 1260. And then this amount is 48. So these two plus together, we get 1740. So the answer is B. Question 20. At 1st January, there was a credit balance of 800. Credit balance, this is an expenses account. This is electricity, is expenses. Credit balance means balance BD, 800 sitting here, liability. Payment made, this one is a bank amount, 4,009. At the end, a further 1,008 of electricity has been used since the last invoice was paid. So that means this one haven't paid. It's an accrued amount. Accrued amount is sitting in here. The question, how much the income statement of profit or loss? So the differences is taking the debit minus the credit, which is 5,009. So this is the income statement or the profit or loss amount. Question 21. On 31st December, Manjit was owed commission. Okay. This one is an income to Manjit. How would this commission show on the Manjit statement of financial position on 31st? Income accrued. income accrued is a asset. So this one will be sitting under the current asset. So here, accrued current income, current asset. The answer should be A. Question 22. What does the balance 300? 300 is referred to this one. This one will transfer to here, become balance BD. Balance BD in the debit side. This is a current asset. Rent receivable, this one is an income account. It means income owing is an asset. So accrued income, okay, accrued income. 23, a trader has the following. This one is an expenses account. So expenses account, bank in the debit side, income statement of profit or loss in the credit side. So what does the balance on 1st January? 1st January, but they are asking year 2. That means they are asking this one. This one is a current liability. Expenses owing is a current liability. Owing means that outstanding. Okay, the answer is A. Question 24. Rent receivable, this is an income account. Income account, bank in the credit, income statement or the profit or loss account in the debit. So which entry was made in the income statement for the year ended 31st December 2020 for the rent receivable? They are asking the income statement account. So here is debit, transfer to here will be credit. So here is 3,004, total debit, credit minus debit. So this amount will transfer to income statement in the credit side. So the answer should be A. Okay, question 25. Why is it important to match the cost and the revenue? So this is under the matching principle. Okay, so that what is the matching cost incurred matched to the revenue earned for the same period, so that we can calculate the profit, the accurate profit for the year. After that, the business can do the comparison. So the accurate one or the best answer is C. 26. A trader has a credit balance on the head. Credit balance start, that means balance BD, liability. This is current liability. So amount, expenses, this is expenses account. Expenses owing is a liability. So the answer is accrued expenses. 27. At the end of financial year, Raminder make an adjustment for rent owed to him. This is an income to Raminder. Okay. How did it affect the Raminder financial statement? So your double entry will be debit other receivable, credit rent receivable. So this is a double entry. When you credit income, credit, income will increase, profit will increase. So profit will increase. And current asset, other receivable is a current asset. Debit is an increase. So the answer should be D. 28. Abdul is a trader. He rent out part of his warehouse to other businesses. Abdul is preparing his financial statement for the year ended 31st. His rent income account showed that rent receivable. Okay, we open the rent account, rent income account. Okay, rent received during the year. This is a bank in the credit side. And then rent income transfer to income statement. That means this one in the debit side. This is an income statement of profit or loss. What does the closing balance? So take the bigger number minus the smaller number. That means you have balance CD in the credit side. So this amount transferred to here become balance BD, which is the current asset. So this is a accrued income.